Good evening. This is Simon with Trade and Perform Coaching, and today is July 31st, 2013. The legalese for today's trade reviews that nothing in this video, on my Twitter stream, or on my blog should be considered or taken as a trading recommendation. This is purely for educational purposes only. Trading futures, equities, and options carries an extreme amount of risk, and you can lose everything that you've put into your account. So now that we've gotten through the required, what I call boogeyman requirements, let's talk about what's really happening and how we make money in the market. So this morning we opened and we had Fed Day on hand. So when I know that I have Fed Day later in the day, the first thing I'm steeling myself for are big, fast, violent moves. And the first thing I think to myself is, how am I trading? Um, do I really want to take a risk of being run over on my stops? And am I prepared mentally? Do I know my levels well enough so that I can exercise good judgment and place my trades well? And that can be difficult. So let's look at what happened this morning at the beginning. So we're opening near the top of value, and one of the issues that we've had going forward is this has been a top for quite a while. We've been in this area repeatedly. We opened up right near it, and the concern I always have when we've, just like on any support zone, once it's tested once, twice, three times in a row, is it's just simply more likely to break. Eventually they're going to break that, and we've been consolidating, and we've been consolidating with an upside bias. So my thought in my mind is that we're going to have a range extension, and that's exactly what we've got. So the idea with the white zone, just to cover it quickly, the white zone determines who has control. Buyers are generally in control above, and sellers are in control below, particularly with regards to this area here. Now, most of the time, what my rule of thumb is I want to try to skip this area for taking a contra trade more close to the white zone if I don't plan to be aggressive. Now, I am an aggressive trader, but being less aggressive is totally acceptable when you're building your trading account, because you don't want to stack up your losses. It really plays with your mind mentally and your ability to take good trades time after time after time. And the reason why we're all here to trade is not actually the act of trading, but it's the act of growing your account slowly and steadily. And if you can't be consistent, it can drive you mad. I was never a good 50-50 trader. My wins were never better than my losses, and I had to find another way around that. So right out of the gate, let's kind of go through the open. The white zone was right here at 62.50 to 84.50. We opened above it. I actually had a limit sitting there at 64.50. I didn't get hit, came within a tick. I had no trade there. Now, we did move rather quickly up to the middle, to back of this zone. And I do tell the clients that I coach, if you're going to take a trade and you're going to be aggressive, you really ought to shoot for as far back into the zone as you can, because the odds are very strong that you won't get a good rotation lower here. And so that's exactly what you had. If you shorted the middle of the zone, you were lucky to get 6 ticks, which is exactly what I got on that trade. And my concern was that we were breaking above value, and you can see that we just kind of built this little amount of pressure right in here. We sat, and then finally, looks right when we came out with the number for oil inventories, I believe it was, that we finally got a pop, and it pushed us up. And it pushed us where? It pushed us right to initial resistance. Now, the way that I look at it as, every time we get to initial resistance, I expect responsive sellers to come in and act. So I have one of two ways of looking at this. If I think that we might possibly have a drive up to 1700 or higher, which I did think that was a possibility, I simply want to be cautious at initial resistance. I may just simply decide to, if I'm long, which I was not able to get long in this, but if I am long, I want to be selling a portion, if not all, of my position into initial resistance. The question of that is why? Well, first of all, on Fed days, it's hard as hell. I expect on any other day, I'd be shorting or looking to short initial resistance, looking for tick divergence, anything that would get me in. At this point, I'm looking for a rotation lower. I'm willing to lose money if I'm wrong here. but as long as it's within the zone. As it was, we got up in here. I cautioned against taking longs or staying long through here, and I also cautioned about taking shorts through here. I simply didn't know. So when I don't know, I don't trade. As it turns out, we got a beautiful rotation down and into the end of New York lunch. We rotated all the way back down to the white zone. Now, people always get confused about this. Even though we've rotated lower, buyers are still in control. What would it take for buyers not to be in overall control of this market? For them not to be in overall control of this market, we would have had to close below the white zone on a 5-minute bar. That's what it would have taken. It never occurred until the very end of the day. We then came out of the white zone, rotated all the way up into the news, and this is a fat rotation. Look at this. Out of this first move into the white zone, which we never got to move into the white zone here. This is the first move. This is 1684 all the way up to 1690. It's a 6-point rotation. You can easily attain your 2-point targets, which I focus on to build an account. Why do I focus on 2-point targets? I know that I can get them not on every trade, but pretty damn close. And consistency in trades, I try to stay consistent, have consistent winners, and instead of trying to increase the number of trades I'm taking, I simply try to increase my trade size on my successful trades. And it can be done. That is exactly how you build an account. People drive themselves nuts trying to get every trade and every move in the market. It's simply not necessary. 1 or 2 good trades a day is all you need. Now, I caution on all this action here. This looks great in retrospect. It was hard while it was going on. If you thought somehow that you could nail the 1694, and by the way, I did see several people call it in advance on the internet via Twitter. Kudos to those people. I'm not so confident on these days. I've seen them get run over. Maybe it's my experience of having traded for over 15, 16, 17 years in the market. I've seen these areas where you short, you get 2 ticks in your favor, then it blows through against you and you've racked up a loss. Also, I have a rule. We're going into the last hour of the day. We're trading above the first hour's high, which I'll count this as my first hour's high right here, near the high of the day. The majority of the time, this will result in a painful loss. As it was, I wasn't taking a long or short in here, and I simply said if it rolls over and it goes to 0, it'll simply do so without me, and I'll take the next trade where I can structure it properly. This is a huge downside, and I can tell you that very few traders actually caught it from here down to here successfully. And here's the other problem. So we're going into the last couple of minutes here, and people are still trading this. This is a rip from almost 1680 all the way up to 1686. That's a big loss to take at the end of the day. Let's say you had shorted here, you chased down. You very well lost money here thinking it was going to roll straight down. And then the point for chasers. If you're chasing longs into initial resistance, I expect responsive sellers. This is a perfect example of where this is the first time in, this is the second time in. The trade still worked to the downside. Sellers were there. However, the odds were lower. It just worked out this time. My entire focus for the entire day in building my account is first move into the white zone and then catching either this rotation down or this rotation down for 2 points. I don't care about everything else. Do the math. Increase your trade size every 10 successful trades that you have. When you get to 10 successful trades, assuming you only have 1 or 2 losers, increase your trade size and keep doing that day after day. I invite you to go through and look at my blog on the first trade into the white zone and see if you can't visualize repeating that pattern and building your account. Once you start to build your account and you have P&L on your side, you have size on your side, and then you want to trade this stuff, even though I don't, then you're more than welcome to. Let's say you trade 10 contracts here. Well, trading 3 contracts here or 4 contracts and trying to capture a larger move down is totally fine. The problem is too many new traders come in trying to capture these large moves, and they get them once in a blue moon, and they rack up a ton of big losses in between until their accounts are decimated. And they then have to have the big moves to catch back up. It becomes a vicious cycle, and you're out of business before you know it. Don't let it happen to you. Do not. And if you looked at any of this stuff and you thought you were a genius for taking it, this is hard. When we move in one candle, from approximately 1687, let's call this, all the way down to about 1681 in one candle. That is hard way to make a living. Stops just got obliterated here. Tight stops, poor entries, whatever you want to call it. Even though the white zone worked perfectly, if you entered anywhere from the top to the middle with an appropriate stop, meaning 2 or 3 points behind the back of the zone, you had a beautiful trade here. But I promise you, out of 10 traders that took it, 1 or 2 made the money, everyone else lost. So let's quickly go over and take a look at NQ now. And on NQ was simply a thing of beauty for me today. So again, in the morning, buyers were in control. I missed my entry. I didn't get filled. It didn't come anywhere close to filling me at this right here at 30.85.50. I had it at 60. It should have been 50. I didn't get filled, and truth be told, I probably should have. I actually had it a little bit tighter. I adjusted it afterwards. My level actually was here at 30.85.50, and I should have adjusted it up just slightly to account for this gap right here, and I probably might have gotten filled. You make some, the white zone is critical to my trades, and occasionally I make errors in it. And I go back and look afterwards and I go, well, maybe I should have adjusted it up or down. But that being said, so I didn't get a fill here. I was not looking to short. Again, if you look at a larger picture on NQ, and we'll squeeze it down here. Okay, just this thing's in a roaring uptrend. Okay, I understand that there's been some rollovers here intraday, but the easy way has been to make money to the long side on this thing. And as long as it's keep going up, I'm going to keep leaning to the long side and having to be very cautious on short side, meaning when I say that, it has to get to a major level. A major level will be initial resistance. And lo and behold, look at this. Over lunch, we came right in. Boom, we come right into the white zone. This is the first touch. Look at this rotation up. It's beautiful. Then the data comes out. We get whipped all over the place, but again, move into the white zone. A stop behind the white zone kept you in fantastic shape for a long. Okay, and then look at this move. Right up, literally we tagged initial resistance almost to the tick, 31.05. I expect responsive sellers there. And even if you're not taking a short in here, which again, I didn't, okay, even if you're not taking a short, you should be selling into initial resistance, in my opinion. I know that I am if I'm long, okay? And then you'll see we moved all the way back down into the white zone, and then essentially this zone here at 30.94.75 to 30.90 3/4. This zone right here, it did act as resistance. We pushed a little bit behind it and it failed repeatedly. But you'll see right here this rule of the second move in. This is first move. I really count all of this as the first move. We never closed below, but this move is the second move and it held for a rotation lower. Third move, busted up. And then here's the problem with news. So this would be the first touch of the zone, even though it didn't trade in. And we did rotate up. We didn't get 5 points, but the second move in flushed through here. And it's just simply why I'm cautious on second moves into zones once we've cleared that zone, which we did. We got a little bit of space right here. If you can see, I'll widen that out. When you get even just a little bit of space, the second move in would be considered the second move in this particular case. It varies. More importantly today, in the last hour, we were rolling over, and trades in the last hour are hard. So for everyone who made money today, I promise you there was a ton of traders who lost money. And my general rule of thumb on Fed days are they're hard, and I don't count on them to make my bread and butter on a daily basis. I count on my 2-point trades in ES. I'm counting on my 5-point trades in NQ. Summertime, I pull that back just a little bit because the lumbering nature of the market. So I hope that helped a little bit. I'm happy to answer any questions that you have. It is possible to trade profitably on a daily basis, folks. You just have to have the game plan and the edge to do so. My name is Simon. I'm with Trade and Perform Coaching. If you have any questions, you can reach me at tradeandperform@gmail.com. I hope everyone banked today, and I look forward to taking more money out of the market tomorrow. Have a good night.